reason we recommend RF&D as a sell is because of their exposure to macroeconomic volatility. First aspect of this is slowing growth in emerging markets such as China and India, which account for 47% of RF&D revenue. We also see the debt crisis in Europe and slow U.S. GDP growth as causes for concern. As you can see in this chart behind me, RF&D suffers worse than their competitors during bad economic times, as you can see basing RF&D stock price compared to the NASDAQ return.
Due to this volatility, in 2011, RF&D established a compound semiconductor group, which makes the base products from the multi-product group and their cellular product group. Through this, they've combined their R&D functions for cost savings and synergies. However, over the past 5 years, RF&D has consistently underspent the industry average of 20% of revenues
The second of which is improving macroeconomic conditions, especially in Asia and the United States, where most of the end user demand comes from for RFMD. And finally, if RFMD can successfully expand its customer base, we could possibly see an increase in revenues and an increase in share price because of that. To study this, we conducted a sensitivity analysis where we took possible revenue growth rates in excess of our model projections, ranging from 5% to 25%, as you can see behind me. And from there, we used those growth rates in excess of our projections to develop 15-month target prices. Below the 15-month target prices are theoretical 15-month holding period returns for these investments with the various revenue growth rates. One thing that's important to note out on this chart is that as revenue increases between 15 and 20% in excess of our model projections, RFMD passes our capital asset pricing model required return and becomes a theoretical buy. To reiterate, RFMD is currently overvalued. We believe it is a sell, and we've developed a 15-month target price of $5.18 for three primary reasons. The first of which is RFMD's unusually high exposure to economic uncertainty. Semiconductor manufacturing as an industry is more volatile than other industries during times of economic uncertainty, and RFMD, more so than its competitors, sees its profits swing with economic volatility. The second reason is that RFMD, based on our growth projections, simply will not compensate investors enough for the level of risk inherent in an investment in this company based on our capital asset pricing model required return. And finally, we believe that RFMD simply lacks a sustainable competitive advantage. While it is a market leader currently, and it does have intellectual property right now, we do not believe that it can sustain this due to the fact that it consistently underspends its competitors in research and development. At this time, we would like to thank you very much for your attention and open the floor to any questions you may have. Thank you very much.
Your 15-month price target is higher or lower than the current market price?
It is currently high.
So why is it a sell?
It's a sell, in our opinion, because based on our capital asset pricing model, how high it is, using RFMD's calculated data, we believe that once you discount its 15-month target price, the current value of that 15-month target price will actually be below RFMD's value today.
What's the market listing that you guys are seeing? Makes it a sell.
Well, a lot of the analysts that are covering the company, the 13 analysts, they have not updated, most of them have not updated their target prices for 2013. And our micro devices actually reported very poorly this last quarter. In Q3, they missed guidance by $25 million, and no one really reported the change. And looking forward, we see that the emerging economies aren't going to be as positive as RFMD's management is suggesting, because we believe that the Chinese slowdown, which IMF and the World Bank have shown evidence for, we believe is going to affect our micro devices going forward.
Would you say this company is more affected by its internal constraints in management and R&D, or economic constraints out of control?
I think there's two sides of both impacting them. Both are negative for RFMD. First, management we can start with. They consistently underspend in research and development. And in an industry that's so driven, where revenues are so driven by innovation and new technologies, RFMD is going to underperform its competitors in the future. The second is the economic environment. We believe the economic environment presents a big challenge for RFMD going forward, as most of their revenue is driven by end user